Hello, I'm Liz Lumley of Finextra, and we're here at the SAP Financial Services Forum in London. And today I'm speaking to Scott Bales, who is an internationally known IT and banking consultant. And we're going to talk a little bit about what you're calling a digital gap. And when we were having a discussion, it reminded me of a conversation I had with a friend of mine who works at an innovation lab at a bank. And she was talking about her frustration with trying to build products, but not being able to talk to customers or even access customer data to build it. You know, how widespread a problem is that for banks?
So this is a challenge that it's not specific just to banks as well. I've spent some time in healthcare and insurance as well. Is one of the, let's say, the incumbent challenges that a lot of these large organizations have created for themselves is extremely structured. They're very hierarchical. The control measures are in place. They've got everything in place to avoid a crisis. But what actually it means is they've actually avoided direct communication in a lot of cases with their end consumer. I speak to the insurance sector specifically, is in around the late 80s and mid 90s, the role of the agent or the broker became much stronger, particularly as we came into the digital era as well. You had digital brokers. Those brokers have become basically, let's say, a barrier between the organization, the product owners, and the actual end customer. As a result, they aren't speaking to customers. And if you look at all of the capability models, whether you're a design organization or a consultancy or a startup, one of the core sort of capabilities you need to build amazing products is a direct dialogue with your customer, to learn what are their needs, what are their desires, what are their objectives, what are their pain points, so that you can help build those things into the process of actually creating a product. So we moved from an industrial age structure, which is very risk averse and strong, but in the new digital age, we're talking about an area that's neural networks, transparent, direct to the consumer, even to the point where consumers can talk to other consumers. They're important things to understand in terms of the structure of an organization, the structure of a brand, of products, even their acceptance in the market, is very, very important to understand how these networks have changed. One of the interesting case studies actually has nothing to do with banks, is the US military went through an amazing transformation through Desert Storm and then into Afghanistan. In that realized that the formal structure of a hierarchy to run military operations in places where terrorist organizations are operating wasn't working. And they actually had to create a new thing called literally neural networks, where independent cells were allowed to operate and directly connect with their ecosystem around them without formal need to go right back up the hierarchy to the brain to decide what do I do. They're allowed to make in the field, in the moment decisions. They're empowered to, within context as well, to make things happen. And this is the thing where I'm actually seeing in the organizational design needs of an organization transforming over the next couple of years. So a lot of the things I'm working on right now is around how do we empower teams to have direct conversations with the consumer. It's literally to get out in the street here and say, what are your needs around insurance? What are your needs around banking? What do you do with your money? What are you trying to save for? Do you want to go on a holiday? And what does that mean in terms of inputting that feedback into the product creation process?
I mean, I think a lot of people inside banks feel they don't have that power to do that. It seems like there's this huge disconnect between the way banks operate and the way people live their lives on the street. So, I mean, how can that bridge be gap? What are some of the strategies they can use?
Yeah, so one of the things that I've been refining over the years is actually a core framework which I'll put into my next book. It's around 4 C's. I've made it really nice and easy to remember. It's creating the right context, building the right culture, having the right capabilities, and collaborating with the right partners. Seems quite simple and straightforward, but the intricacies are actually inside it. It's around context, it's around how do you design your organization to accept failure, to be curious about things, to understand that failure is a lesson, it's not failure. And how does that lesson come back into the organization? How do you structure the financial or the P&Ls in a way that allows for experimentation? The next is around culture, is how do you actually make your employees naturally curious about the people around them, from a work context as well. So literally they're on the tube and they see someone across the tube doing an Excel spreadsheet on a mortgage repayment, understanding what's going through their heads as they try to buy a home. The next is around capability. How do you put the skills into your employees so that when they are in those moments, they know how to identify and document an opportunity, to then pursue it and validate it in a low-cost, simplistic manner in the same way a startup would do, using lean startup methods, and actually look to bring those ideas into the organizations as potential paths for opportunity, whether that's a disruptive new product or enhancement on an existing one, or just an improvement way of doing an existing product within the business. And the last part is around collaboration, and this is the one that banks really struggle with a lot, is realizing that a lot of their best opportunities are actually going to come with collaborating with people who've never collaborated before. So we talk
I think
about
banks have trouble collaborating with each other.
exactly. I mean, yeah, getting bank-to-bank payments is a challenge. But what it comes down to is realizing this: nobody buys a mortgage; they buy a home. And through the journey of buying a home, there is a number of entities which actually add value to that journey. Is realizing that as a bank, you might want to work with other players, a real estate agent, an engineer or a property inspector, legal. There's a number of other players that actually add to that process of buying a home. And there's going to be logical places where we could extend the mortgage offering. Instead of being a mortgage, is okay, we're going to help you buy a home, and we're going to add legal support, or we're going to add this support or that support. We'll help you with evaluations, we'll help you with insurances, we'll help you with the move. Interesting thing is I still don't know why no one's done this. Banks have amazing buying power, group buying power. They have logistical preferred partners. Yet so when someone buys a home, why don't they offer their logistical company to do the move for them as a part of the mortgage? Like it's an existing contract you have, it's probably an additional revenue opportunity, and you know what? It'll make the customer happy because moving home is a pain. Yes, it's not directly financial services, but it adds to that journey of buying a home.